every Kenyan should own before retirement. For most people, retirement fails for one simple reason, because everyone relies on one source of income, pension. And this is the truth. Pension alone is never sustainable in today's economy. Inflation rises, medical costs increases, life expectancy has become longer, and dependents don't suddenly stop depending on you. And yet, most retirement plans assume that life will remain cheap, that life will remain constant, which is wrong. And this is why building multiple income producing assets before retirement will give you four powerful benefits. Number one, income stability. When one source slows down, another one keeps running. Second reason, inflation protection. Assets grow, pensions don't grow. Reason number three, freedom and flexibility. You are not forced to depend on children or relatives when you stop working. Reason number four, peace of mind. Think about it, that money stress is lower when income doesn't stop. So in this video, it will be a short video. So I'm just going to talk about four asset categories that every Kenyan should own before retirement. And for each, I'll explain what it is and show you how they work together to replace your salary. Asset category one, paper assets. Paper assets are the foundation of every retirement because they give security. They are designed to preserve capital so that you don't lose your money, generate predictable income consistently, and reduce risk. This category includes assets like treasury bills, treasury bonds, money market funds, fixed income funds. When you talk about paper assets, we don't talk about get rich quick assets because they are not. What they do is that they are stay safe for life assets. They give you that coverage, that assurance that for life they're going to serve you. Treasury bills and bonds allow you to lend money to the government and earn interest. Money market funds, on the other side, they allow you to have the liquidity that you can access cash on a regular basis, and at the same time, your cash will earn interest. So they give you the liquidity aspect. Why do paper assets matter before retirement? They give you one, capital preservation, you don't lose your money. Two, predictable income. Three, liquidity for emergencies. And number four, stability when markets are volatile. In retirement, stability matters more than high returns. Let's look at the application. Paper assets should act as income buffer. They pay you monthly, they pay your monthly expenditure, they pay your monthly expenses when business income fluctuates, when tenants delay the rent, when markets slow down. A good rule of thumb is to always allocate a portion of your retirement portfolio to an asset that can cover at least 12 to 24 months of expenses. This will prevent panic selling of other assets. Asset category number two, real estate asset. This is less liquid as compared to paper asset, and it's one of those trusted retirement assets in Kenya, and for a good reason, because real estate provides regular cash flows, long-term appreciation, and inflation protection. But Real estate is a broader than just owning rental houses. This category comprises the following. Yes, you can own houses, rental property, but you can also invest in REITs, real estate investment trusts, and short-term rentals as well as Airbnb businesses. Let's look at each of them briefly. When you own rental properties, it provides consistent monthly income. REITs, on the other hand, it allows you to earn from property without having to own or manage buildings. Short-term rentals can generate higher cash flows when well managed. Why does real estate matter before retirement? Reason number one, rent tends to increase with inflation. You can we call it market repricing, something of sort. You can always increase the prices to cover up for when inflation eats up your money. So rent tends to increase with inflation, but pension income does not increase. Therefore, real estate allows your income to adjust with the economic reality. Applications for real estate as an asset class. You don't need many properties. You need a profitable and well located debt control properties just to serve you. If if direct ownership is expensive, as it will sometimes will be, rates on the other hand will allow you to participate with smaller capital. In retirement, real estate becomes your income engine, while paper assets act as your stabilizer because you can always access that money. Asset category number three, digital products and intellectual property. Let's look at it. Now, this is normally underrated, especially in Kenya. It's not well developed, but it's hot cake. Digital and intellectual property, they generate income without your physical labor. You put the work upfront, potentially in your 30s, in your 40s, and in your 50s, so that in your 60s, when you retire, it's able to give you income. This includes things like online courses, ebooks, paid newsletters, YouTube channels, blogs, licensed content, and software as well as digital tools. What is normally required is that these assets will require initial upfront time and money and systems. You create them. But once you create them, they can generate income repeatedly for a long period of time. Why do digital assets matter before retirement? Number one, they scale without proportional effort. Number two, they are location independent. You can be in a different country and you sell them in a whole new different country. Number three, they can earn in foreign currency and this will boost your earning power. Number four, they don't require daily physical involvement. This is critical because as you age towards retirement, your energy levels decline. You are not as active as you would have been when you were young. So you require something that will be able to work at the same rate or almost at the same rate and give you income when you cannot be actively engaged. Applications. Your digital assets should be built around your knowledge, your experience, your skills, the expertise that you have or that you've acquired for the last 20, 30 years that you've been working. Professionals like teachers, consultants, entrepreneurs, bankers, and name them, any person that you can think about, they are sitting on monetizable knowledge, on monetizable skills that they can convert into asset paying digital products. In retirement, digital assets act as low maintenance income streams that will always come in to complement those traditional investments. Asset class number four, the last one, business assets. Businesses will always create highest income potential as compared to all those classes that we've talked about, but they require most structure in place. Why am I saying that they'll create the highest potential? Because from business, the returns from a business are around 40%, sometimes 30%, sometimes 50% for those well-structured business. And out of all the asset classes that you have looked at, none of them gives you 40%. None of them gives you 30%. Most will try to give you 18 or 19. So this is why business is most lucrative. So this category includes you can own a business or buy shares in an existing business or be a silent partner or have franchises. A business is not just something that you work in. A true business is something that pays you without your daily involvement. Why do businesses matter? Because they offer highest income potential, as I've mentioned that. Business will offer you up to 40%. They offer control over cash flow. You have got control over cash flow. When you have a business, you can decide to increase the prices. You can decide to increase the prices of the products or the services that you are offering. So this will offer control over the cash flow. The number three, ability to employ systems and people so that you take yourself out of the business and the business continues to serve you for later years. Business assets outperforms salaries and pensions over a long period of time. Application. Now, the goal is not to retire and start working harder. The goal is to build or invest in businesses early, build systems, build build structures in place that will be able to work when you are not there. That is the secret. So set the systems and structures in place, then step back so that they're able to work and you work on your business. You don't work inside your business. By retirement age, you should own a business that you don't physically have to be there for them to run, as this will allow income to continue even when you slow down, even when age catches up with you. But these four categories, they have to work together. We have to find a way of them working together so that you don't over rely on one category. If you merge these ones to work together, they you have a leverage such that paper assets provide stability and liquidity. Real estate provide inflation and adjusted income. Digital assets provide scalable and low effort income. Business assets provide growth and cash flow power so that you don't rely on one asset which is very risky. So combining the four, there are others. Combining these four, which are the best, will create resilient resilient retirement income when that time comes. This is how salary is replaced, not by one big pension, but by multiple income streams that work together coherently to serve you purposely. So retirement is not an age. Retirement is a financial condition. It's a financial time frame that you need consistent income streams to serve you well when that time comes. So if your income stops when you stop working, retirement will be very stressful. If your assets keep paying you, now retirement becomes freedom. Pension is helpful, but it's not enough. Build assets, diversify income, and the most important thing that I'll have to mention for you is that start early. The best time to prepare for retirement was years ago. The second best time is now. And as you prepare for retirement, one tool that will guide you is this book. I wrote this book and we launched it last year after the last bell. The teacher's blueprint to monetize your skills, redesign your career, and thrive beyond the classroom. Many a times, like people in the teaching profession, they stay too long and scales just come off their eyes after retirement. But this book teaches you the strategies, the mindset shift, the systems that you have to employ if you want to set up an intellectual asset class that will be able to serve you better for longer. So I'll leave, if you want to a copy, I'll leave the link in the description. Not a link, I'll just leave instructions on how you can get it, and we'll have it delivered. That is it for this video. Thank you for watching, and I'll see you in the next video. Bye bye.